2 days ago, I made this video. Now that video is currently doing really well, so thank you everybody for watching that. Now since uploading that video, I have had a lot of questions about this strategy, so I will be going over all of the details in this video. So if you are unclear on a few things after watching that first one, hopefully this video will clear everything up. Now this strategy is the reason I am no longer using Forex robots. I am now a manual trader. I'm currently completing a 5k funded next challenge, and in the last video I did have a 100% win rate. Now full disclosure, my win rate is now at 72%. Now I did say at the end of the previous video that I am a beginner trader, and this is the first time I've ever tried to pass a prop firm challenge. I also said that my 100% win rate wouldn't last, which is absolutely fine. To be honest with you, win rate doesn't really matter. It's more about actually passing challenges and becoming profitable. So without further ado, let's get into the strategy that has made me stop using Forex robots. So this is how I set up my trading view. I use the split screen view, which you can find there. And all I'm looking at is I'm looking at a higher time frame on the left and a lower time frame on the right. Now me personally, I use the hourly on the left and then the 5 minute or sometimes the 1 minute on the right. Now this strategy can be used on different time frames, provided that you are using a higher for the bias and then a lower for the entries. There's no reason why you can't use the 4 hour and 5 minute, or the 4 hour 15 minute, or the 30 minute 1 minute, 15 minute 1 minute, whatever you choose. Ultimately, we are using the higher time frame to decide if we're buying and selling, then we're looking for an entry on the lower time frame. And what I do is I come to the charts just before 6 AM UK time, and I'm having a look at how the previous hourly candle has closed. The reason I like to trade the 6 AM candle is it's pre-London and there tends to be quite a lot of volume during that time. So I will trade the 6 AM candle as well as the 7 AM candle. I then don't take any trades at all until 12. 12 is pre-New York, where again, the volume's starting to come back into the markets. So I'll trade the 12 PM candle, the 1 PM candle, and then potentially the 2 PM candle. It just depends on how much volume is in the markets at that time. And they are the only candles that I trade personally. So let's look at an example here on GU. Now full transparency, this is a cherry pick trade. I know this trade is going to win, but the reason I wanted to show you a winning trade is just to help illustrate what I'm talking about. Sometimes it's easier to actually see it in action as opposed to me just talking about it. So I get to the charts at 5:55, and this is what I can see. I can see that GU is going to close bearish. So we've had a bearish candle from 5 till 6. So at 5 o'clock, price opened here, has pushed down, did actually push a little bit further, however has pushed up since, but is going to close bearish, showing potentially that the British pound is weak. So once I see that, I then look at another pair with British pound in it. So I'll look at GJ for example, and I can see that the 5 till 6 candle there is also very bearish. Now by looking at a different pair, it just helps fuel the idea that potentially this currency is weak. So British pound may be weak. We have had a bearish candle here on one pair. How does it shape up against something else? And again, we've had a bearish candle. So that's why potentially British pound may be weak and I will be looking to sell. So what I'd do is at 5:55, for some reason my trading view is saying 4:55, even though you can see that this was 5 till 6. You'll see when the 6 o'clock candle opens, which is there, it is clearly on the 6 till 7 candle, but for some reason my 5 minute chart is a different time than the hourly chart. Anyway, this is what the trade idea would look like. So the new 6 till 7 candle has now opened. That's the candle I want to be trading because I've seen how the 5 till 6 candle has closed, and I'm now looking to enter on the new hourly candle. The reason I enter on the new hourly candle and not the previous hourly candle is because I want to see how much momentum is still in that pair. So yes, we've had a bearish close previously for an hour. However, price may open on the new hourly candle and just shoot upwards. I don't want to be taking trades late on into an hourly candle. I always look for the new hourly candle to open, and then based on how the previous hourly candle has closed, that's how we'll be trading. So the trade idea would look something like this. Stop loss above this previous high. So you can see price push down, and then this bottom wick rejection here is during the 5 till 6 candle, just where price retraced a little bit. However, my bias is that price is still going to go down. So even though price has retraced, I will just be looking for a sell opportunity. Now I will have a sell stop order below this low. So you can see price has come down, made this low, made a lower high, and then I am looking for a break of this low to be triggered into that trade, which you can see we get. And like I say, price just continues down. I knew it was going to do that. I told you it was a cherry pick trade just to help illustrate the idea of this method. So if you play it forward a little bit, you can see the 7 till 8 candle has closed bullish with a bottom wick rejection as well. Now, like I say, this is not a time that I will be trading. I would have walked away by then. But I just wanted to show you this trade because if you are someone who likes to just trade it out, not necessarily trade sessions and just get involved and trade whenever, this is a potential trade that you could be looking at. So if we look here at 7.55, this is our highest point. So then we would look at GJ to see how that's closed. You can see that's closed bullish. You could potentially look at another pair. You can see that that has also closed bullish as well with a bottom wick rejection. So now the British pound has gone from being weak to being strong in this hourly candle. So at this point, you could potentially be looking for a buy order. Now what you do here is you'd set a buy stop above this level, or you can use a market execution however you would prefer to enter trades. Sometimes I use a buy stop, sometimes I use market execution, it just depends. Stop loss below the previous low, and then whatever your target may be. Sometimes just go for a 1-to-1. Other times you kind of use a higher time frame to get your targets. So maybe the hourly chart here, you could be aiming for this high. And then when the new candle opens, you can see that price immediately triggered in, and then within 5 minutes, price has continued up, and that is a take profit as well. They're not all going to win, obviously, but I just wanted the video to be really clear on the entries of each trade. I'll show you another example here on Great British Pound US dollar. So this is the 10 till 11 candle. Again, not a candle I trade personally. Price has closed bullish, you can see that there. So from 10, this is where price opened. Originally, sellers tried to push it down, failed. Price is then pushed up, and then at 11, this is where the candle closes. So what you'd be looking for is a break of a high. Now this isn't a great stop loss on this one because you can see just before the new candle open, price did push up quite a lot. I'd much prefer a nice tight stop like something like this. However, we can see the Great British Pound AUD is also bullish, so there's a chance here that price may continue upwards because of the strength in the British Pound. Risk to reward of whatever you go for, price triggers you into the trade and then continues upwards. So let's have a look at another example here on Great British Pound US dollar. So you can see the 11 till 12 candle has closed nicely bullish. Originally, when the candle opened at 11, sellers tried to push price down, failed, and then price pushed up to here and then closed here at 12. Now when we look for confluence on this one, you can see that GJ is actually bearish, and then Great British Pound Aussie dollar is also bearish. So maybe the pound isn't exactly that strong. However, because we are buying against the US dollar, we just need to see what the US dollar is doing. So if pound isn't particularly strong, however US dollar is particularly weak, there is a chance that price may continue upwards. So if we look at US dollar, you can see USD CAD there, clearly a bearish candle, USD JPY, another bearish candle, USD CHF, another bearish candle, which just shows that US dollar is weak. So even though British pound isn't particularly strong, we are still happy to take this trade because of how weak US dollar is. So when the new candle opens, I will have a buy stop order above the previous high, the stop loss below the previous low. You can see that there on the 5-minute chart. I would always wait for that new candle to open just to see how price reacts. You can see that we got triggered into the trade pretty much immediately, and then price did continue upwards. Let's have a look at another example here, this time on Euro USD. So the 1 till 2 candle has closed bullish. If you look at Euro NZD, you can see at the same time Euro NZD was also bullish, Euro AUD was also bullish, and so was Euro JPY. So it just shows that there is strength in the euro. So we would just be looking for a buy position as soon as that new candle opens. Stop loss would be below this level. We'd wait for the new candle to be open, put our buy stop order in. You can see we triggered into that one pretty much immediately, and then eventually price does get there. Now what you'll find is sometimes when the new hourly candle opens, price may immediately break the high or break the low, and you'll be triggered into the trade pretty much immediately. However, what can happen sometimes is price can retrace before continuing in one direction. So before the new hourly candle opens, I will mark out the 50% level of the previous hourly candle. It doesn't have to be bang on 50%, it's just roughly. So if we look here, AUD USD from 7 till 8 has closed bearish. Obviously I look at the confluence of different pairs as well. So AUD USD, a little bit bearish, not the biggest close. However, using USD, we can see that USD is clearly strong. So from 7 till 8, huge push on US dollar. So because of that, AUD USD may go down. So as soon as that new hourly candle opens, I will have a sell stop order ready to go. Now this is what the trade idea may look like. 7 pip stop loss above this previous high. So I'm always using the highs and the lows of the lower time frame to determine my stop. But this is what the trade would look like. We would wait for the new candle to open before we put our order in. Now you can see what happened here. Price didn't break the low. So like I say, sometimes it will as soon as the new hourly candle opens. Other times it will retrace. Now the reason we've got this 50% level here is provided price doesn't come above this area, I am still interested in taking a sell. So if price comes and trades above here, then potentially there's a reversal. You know, buyers are stepping in, pushing price up above the 50% of the previous hourly candle, and it's just a chance that price may be reversing. That's why I never take any trades above the 50% of the previous hourly candle. However, just because we haven't been triggered into this sell stop here, doesn't mean there isn't an opportunity still for a trade. So provided we stay below this 50% level, I will be looking for an entry. Now you see price actually tried to push above this area and rejected, which is a really good sign that sellers are still in control. Now there's a couple of different ways we can get triggered into this trade. Obviously I won't be looking for the original trade idea now just because of how big that stop loss is. So that stop loss has gone from 7 pips to break this low to 11. And by the time I'm waiting to be triggered into this trade, I'm missing all of this here. So in this instance, I do get a little bit more aggressive. And even though price hasn't broken this low, I am still interested in these sells simply because of how the previous hourly candle has closed. Aussie dollar is weak and US dollar is strong. So what I look for is a candle like this, huge wick rejection where price has tried to push up and failed, or I would be looking for a bearish candle, doesn't have to have a top wick rejection on it. And once I see that, I'm not necessarily looking for a break of a low, I'm just looking to get involved in that trade. And you see this is a 5 pip stop loss now instead of 11. Now sometimes with these trades, what I aim for is the previous hourly candle's low. So we can see that here, the price has come down to this level during the previous hourly candle. And if there's enough room for me to get a 1-to-1, that's mainly what I'm going for. Or I will be moving stop loss to break even once we get there. Because sometimes what can happen is price can come down to its previous hourly's low and then reject. So that's what the trade idea would now look like. We would be triggered into that one pretty much immediately, and you can see that that was a winning trade. Stop loss would have gone to break even at 1-to-1, and then whatever your target may be. That is why if we don't always break a high or break a low, we are still interested in getting involved in those trades. Like I say, those were cherry pick trades. They're not always going to work out like that. However, so far, this is the first time I've ever tried a manual prop firm challenge, and I am over halfway using this strategy. I am a beginner trader, so the fact that I am already halfway on my challenge shows that this strategy is potentially profitable. I always try and keep a good risk to reward, because if we do get to a point where a win rate is around 50% or less, then obviously the risk to reward is when we end up being profitable. So I'm always trying to go for more than a 1-to-1. However, our win rate so far being at 72% is really promising, and it helps me believe in this strategy a lot more. So hopefully we can get this challenge across the line. I hope that all made sense. If you have got any questions at all around this strategy, please let me know in the comments. Don't forget to subscribe, because I will be making a lot more videos like this soon. And as always, thanks very much for watching.